Okay, in this video, we're going to go through the introduction for the fundamentals of trading, which is basically the Trading 101 course in the MST Academy. So what I'm going to do here is I'm going to break down all of the lessons that we've got scheduled in here. This is going to change and evolve as the MST Academy sort of progresses, but these are the base core lessons that we're going to start with. So I'm going to take you through each of these lessons and explain why they are important. And why you need to know about these as a trader. Once you've done the Trading 101, sort of the essentials course, you can then break off into whatever style of trading that you want to do, which will either be prop trading, trading news events, position trading, or just trading support resistance on any time frame you like. So what we're going to do is just quickly whiz through each of these lessons, and I'll give you a brief overview of what they are and why you need to know them. And they're going to help you decide what type of trader you're going to become. So once you've done this 101 course, the idea is you will then know whether you're going to go into prop and trade futures or trade CFDs, whether you're going to use your own capital to trade, or whatever you're going to do, basically. So I'm going to break down each of these lessons for you one by one and just give you an overview of what they are basically all going to be about. So we're starting off here with choosing the right software for your specific needs. This is going to be about looking at the different types of software that are available for you as a trader. So depending on who you're going to be trading with, whether it be prop on futures or prop on CFD, you're going to be trading your own capital. You can choose from multiple pieces of software, and each piece of software has got advantages and benefits. So automation is an important part of what I personally do. So I use MT4 and MT5 because I want to automate as much of my trading as possible to take the emotion out of it. If you're trading on the futures platforms, however, like Tradeovate, for example, there isn't an automation function there, so you have to trade manually. So it's important you understand what software is available for you and that you can actually use all of the pieces of software out there in conjunction. So you could use one for analysis and one for actually taking trades. So in that lesson, we're going to cover all of that detail. We're also going to look at brokers. This is the next lesson down. So all about brokers, know your enemy, as I call it. So brokers basically are kind of a necessity in trading. They're not your friend, but they are a necessity. So you need to understand how traders work, how brokers work, how they make their money, and what they do. So a very important part of position trading and things that I do is removing stop losses before the end of a session because the spreads widen. So it's knowing how brokers actually make their money. Once you get an inside understanding of what they do and how they work, you'll understand what not to do with your broker. The next lesson is very important, which is called finding your time frame. What can you trade? This is one of the areas which a lot of traders struggle with. And one of the things that you need to understand as a trader is you're not going to make millions overnight. It's a long-term learning process. And you need to understand how to best spend whatever capital you've got available to make sure that you can basically grow it. So in this lesson, what we're going to go through is whether or not you should go straight down the prop route and try and crack prop and get some big capital built using that method, or whether you should use your own money basically to trade. And one of the things that's going to determine what you're able to do as a trader is when you can actually trade. So for example, if you want to be a scalper and trade the 1 to 15 minute time frame, you're going to need to do that on prop most of the time. However, if you work 9 to 5, you can't do that because you're at work. So there's different things you can do with your capital depending on the time available to you and how much of it you have available. So that lesson is all about looking at what is available to you as a trader and what you can actually trade. And that's going to determine the type of trader you become and what type of strategies you use, whether you use automation and trade on CFDs with prop firms, or whether you trade futures on prop firms and do it manually. So there's lots of different ways that you can use your capital, and that's what's covered in that lesson there. Moving on, we've got diversification, correlation and risk awareness. So as a trader, you need to be aware that you've got to diversify both strategy and symbols and instruments that you trade. You've got to watch out for correlation of instruments because that will expand the losses that you take every time a move goes against you. And you need to understand risk and how risk works both in prop and on your own capital accounts. So it's all about making sure that your money is working efficiently and it's not going to be spread too thin or too wide, basically, across different asset classes and different types of trades. Expectation versus reality, how to spend your capital. So again, this is more of a reality check lesson. It goes down the route of what you are actually going to achieve and what everybody on YouTube is telling you can achieve, which are obviously very different things. I've been doing this for nearly 20 years now, and the YouTube generation that's coming through now trying to teach people to trade really are selling the dream and not delivering anything, because it's unrealistic what they're putting out there as what's achievable. So this is really about telling you what you can achieve and how you can achieve it with different types of trading. There's position trading, there's scalping, there's all sorts of things you can do with your trading capital and different strategies. And each of those is going to give you a different return on investment, but have a different risk portfolio attached to it as well. So it's understanding what you can realistically get with your capital, and that will help drive you down whichever road you want to go as a trader, basically. So very important lesson, that one, and it will set you up basically for deciding which route you're going to go with your trading. Why and how the markets move. Very simple. If you do not understand why a candlestick is formed, how it's formed, and where it's likely to go next, you're never going to make it as a trader. So understanding how the markets are going to move and what they do, the cycles they go through, and more importantly, why they move. Who is moving these markets? How are they moving them? And why are they having to move them in the way that they do? So in this lesson, we're going to go through bank and institutional movement and look at the types of orders they place, how they place them, and why they place them. That will give you a firm understanding of the mechanics and the bolts of how this thing actually operates. And all asset classes, whether it be stocks or futures contracts on indices or forex pairs, they all move in a similar way because of the way that banks and institutions execute their orders. So very key lesson, and you need to understand that regardless of how you're going to trade. You've got to understand how and why these markets are moving. Economic data, short and long-term fundamental impact. This is specifically designed more for forex markets and for those that want to make money out of news trading specifically. So short-term scalps at specific times of the week. This explains basically what economic data is, how it works, and we're going to be using some of the areas on the website to explain that in more detail. But it's very important that you understand, specifically in forex markets, what drives forex markets medium to long term, and it's interest rates, CPI, and all the main drivers you see in economic data. So I'll explain what economic data is, how it affects the market on different timeframes, and then we'll look at ways we can obviously utilize that and make money. 3 strategies. There are only 3 strategies. Every single strategy you see on YouTube, every PDF you get, every book you read is talking about different types of trading strategies. There are only 3 that exist. We're going to talk about those 3 strategies. We're going to show you how every single strategy you find will fall into one of those 3 strategies, so that you don't go off and system hop for the rest of your life and never find something that works. When you look at any strategy, you should be able to, after this lesson, identify what type of strategy it is and whether or not it will be or won't be profitable long term. Planning your trade, visualizing the 2 outcomes. This is more about getting into a trade and understanding where a trade is able to go and likely to go, so that you can set realistic stops and targets for your trades. It's more about understanding whether or not an opportunity is ever going to work for you. So if you get into a trade and suddenly it bounces back and hits your stop loss very quickly, there's probably a reason for that. It's because you haven't visualized whether that trade has got the ability to get to where you're expecting it to go to. Also about setting realistic expectations for your trades. There's no point in getting into a trade with a tiny little stop loss and expecting a 15R out of it. It's not going to happen most of the time. So it's about setting realistic targets, but making sure that you know whenever you take a trade, where is that point where I'm not going to be in it anymore, and where is the point where I want to be out of it. Average daily range, one of the most important lessons you'll ever learn in trading. If you don't know what average daily range is at the moment, this is going to change your trading completely. Understanding how far price is going to travel is key to setting up your trades, and it's linked to the previous lesson we just discussed about visualizing outcomes. Every symbol has an average daily range of movement. If you do not trade by average daily range, you are just making it up as you go along, because the average daily range will change of all instruments depending on their volatility and economic data. So you need to take all of your trades based on what is currently going on in the market, which is basically adapting to current market conditions. And this is why a lot of strategies you see out there that use pip ranges don't work anymore. Because when those strategies were developed in whatever year it was, the daily ranges were like this, and now they're like that. So the strategy doesn't work anymore. But if you adjust towards the average daily range with that strategy, you'll suddenly start to make profit again. So very important lesson everybody needs to know. Support and resistance, know where price is heading. All markets have support resistance levels. The market always heads towards a support resistance level. All of these lessons are kind of visualizing where the outcomes are, and support and resistance is all kind of linked in together, and ADR. So you can see where price is going. We can tell you where price is going to head with 100% certainty. It's either going to go to one of those or one of those. So making sure you know where those support resistance zones are is key to any trading strategy. So we're going to go into exactly how support and resistance is formed, who forms it, and basically the different types of support and resistance, which are static and dynamic. We're going to look at candlesticks, the three outcomes, what price is telling you. Every single candlestick has a story to tell. It's telling you one of three things. There are only three outcomes to a candlestick. It can be bullish, bearish, or indecision, neutral. So we're going to explain in detail basically what candlestick patterns are, what they're telling you, how they're formed, basically. So you need to understand how to read price action, especially if you're going to be trading small time frames and scalping. You need to understand how to read the market and read the candlestick patterns in front of you. Market structure, incredibly important. Market structure is all about the repeating pattern of markets, which is created by institutional movement. So we've covered how the markets move by now, and with market structure, you're going to understand why we're creating that structure. So structure basically is higher highs, higher lows, lower highs, lower lows, etc. It's the way the market moves from support to resistance with bank and institutional movement and profit taking. So it's all about understanding exactly how the market moves, and you'll be able to read where the market is going next. Price action patterns to look out for is linked into candlesticks. So we're going to look at the specific price action patterns which repeat themselves over and over again in the markets, which gives you an edge so you can understand where price is going. Price action patterns are things like your head and shoulders patterns, your double tops, those sorts of things. But there are higher probability patterns, and there are also candlestick patterns, which we're going to focus on, which repeat themselves at specific levels, and we can use those as signals to enter the market. Indicator types, know what they are telling you. There are thousands and thousands of indicators out there. We focus on the three main types of indicators, and we will basically put all indicators into one of those bins, basically. So the part of trading which people struggle with the most is system hopping. And the reason for system hopping is because there is so much choice of indicators and systems out there. There are millions of ways to use them. When you understand what an indicator is telling you, you will understand that you only need to pick one of them. So it will help you stop system hopping and refine your strategy down to just using one or two indicators to give you a condition and a signal to get into the market. I'll show you the indicators that I use and the strategies that I use with those indicators, but you can use any indicator you like with any setting. Understanding the probabilities of trading means that you can use any indicator under the sun. 10 steps to building your own strategy. In this, we're going to go through a step-by-step blueprint on how to build a strategy. I'll show you some of the strategies, obviously, that I use, which you've probably already seen. But I'll show you how to build out your own strategies and what every single strategy needs to create an edge in the market. The reason this is important is because the best way to create an edge in the market is to automate it and backtest it with automation. So you can do long-term testing on your strategies and make sure that they're going to work. So that leads us on nicely to backtesting basics for MT4 and MT5. The easiest platforms to build backtesting for on all time frames are MetaTrader 4 and MetaTrader 5. If you're a member of the website, which you will need to be able to view this content, you will have access to the MetaTrader Builder, and the MetaTrader Builder will allow you to build your own EAs for backtesting specific strategies. So these two are very much interlinked. And we're going to show you basically how to set up back tests, how to make sure that your data is verified so that you're going to get good, accurate results, how to do robustness testing, which is the main focus of back testing, making sure that you're not curve fitting a strategy to one set of rules, which will be in the past very profitable, but in the future completely random. So we're going to show you how to back test, how to robustness test, and how to do system parameter permutation testing to make sure that whatever strategy you're trading has a very high probability of working in the future in the same way as has in your back tests. Okay, so that is an overview of the Trading 101, the fundamentals. Once you've done this part of the course, you can then move on to a specific area of interest, and part of this course is going to teach you which of those is going to be best for you based on the time you have available and the capital you have available to spend. So good luck with the course. Hope you enjoy it. If you have any questions, feel free to reach out.